Business Weekly, brought to you by KCB. KCB, making the difference.
Coming up on this week's program, towards increased financial inclusion in an environment of low and predictable cost of financial services and increased financial literacy to facilitate responsible consumption of products and services. We'll be making a case for the establishment of a consumer protection agency to cater for the rights of both providers and consumers of financial services. Still ahead, information technology entrepreneurs come face to face with potential providers of capital in front of a live studio audience. Will they successfully pitch for their businesses? Good evening and welcome to KTN Business Weekly. I'm Anki Guta sitting in for Michael Ayer. Now, apart from mobile phone-based money services, the penetration of financial services, including loans, insurance and investments through the stock market, are indeed very low. Our feature tonight looks at some of the reasons behind this state of affairs and some of the reforms being suggested to make the local financial services sector a mass market affair.
Wilfred Onono, the managing consultant at the Interest Rates Advisory Center, goes through piles of cases lodged by individuals who feel duped by one financial institution or another after getting beaten by the fine print of contracts they scarcely went through before signing on the dotted line. He says that some of the cases the center receives are laughable, characterized by people keenly focused on the financial service itself, full of unflinching trust in themselves and the service provider, that they ignore the conditions of the agreement.
So we have had a lot of cases of people who did not understand that when you delay, you pay more. And therefore, even if somebody had money, he would delay for no good reason. And when the effect is higher interest to the bank, they will complain. So I think there is information that must be given to borrowers, that you must get your repayments if they fall on a particular date, that they are paid within that time. I have seen cases even where people who are employed and therefore the repayment is coming from the check of system from their salary. If he is accounted in the bank, or rather in his company or employer, delays remitting the money as deducted from your account on time, that may cost you money also.
Unfortunately, some financial institutions become the enemy when a customer defaults or fails to observe one or more of the subsidiary conditions, so much so that if a customer is unaware of protection or legal rights available to him or her, it is as if the financial institution will seek to recover up to the last penny under the customer's name without considerate regard to the same individual who was wooed to the doorstep to take up the loan.
You can even pay more than 5 times, more than even 10 times, if you delay or if you make your payments in a very irregular manner, so that by the time you are making any payment, interest has been accumulated over and over again, because that is really what compounding means.
There is room for unscrupulous individuals in financial institutions to make an extra 2, 3, 5, 10% due to the lack of understanding of how interest works on the part of the consumer. So if a bank says that it's charging 16% nominal rate on a loan, and you actually calculate how much you're paying back, you will find probably that you're paying back a lot more.
It is such instances and low financial literacy among individuals that has been blamed for low penetration of financial services.
You see a lot of people saying, I'll never take a credit card because I don't understand the payment system. I don't understand how I'm going to manage it. Those that do know or have heard of or are not in a position to truly understand what the financial service or product that they're taking or that they want to take entails. And that's a reason that...
Statistics from the Central Bank of Kenya indicate that while there may be just about 500,000 life insurance policies and under 1 million CDSC accounts, there are 10.2 million M-Pesa mobile transfer service subscribers and close to 9 million bank deposit accounts. Commercial banking seems to have made significant strides in penetration, mostly because one cannot avoid a bank account if in employment or self-employment, as the modern world requires most transactions to go through the banking system. Similarly, the extremely high uptake of mobile money services is attributed to the features of ease of use, reasonable charges, and the fact that customers are not required to sign extensive and complex legal documents before joining.
I think there is need for a financial services consumer protection agency. Just like any other service or product that is in the market, consumers need protection. But we don't have one. There have been efforts in the past. I'm aware of some individuals who tried to set up one, but it really never took off.
In such a case, a Financial Services Consumer Protection Authority would, among other functions, ensure that service providers adhere to the set rules and standards, provide a recourse to aggrieved customers, and ensure full disclosure of terms and conditions of financial products.
You don't want to over-regulate, so you stifle innovation and creativity. But you also have to have some level of regulation that will inhibit people from trying to take advantage. And so it's a matter of debate. I mean, do we have a separate agency? Do we incorporate what we know about financial regulation within the agencies that we have? Do we have the money to pay? Do we have the capacity?
For instance, banks ought to disclose the cost of loans in terms of annual percentage rate and should provide full details regarding fees, charges, and penalties on credit cards.
What I like to ask banks, especially banks which go by the label of pro-poor, is to really to print out what do they mean by being pro-poor. What rates of interest do they lend to the poor people?
In addition, the manner of computing the interest rate and penalties should be standardized. Consumers, most of whom are not well versed with the complex world of financial products, need to be protected from predatory selling tactics where they are lured on the back of limited information or even misrepresentation of facts.
If you look at microfinance in this country, the real microfinance companies, their money is not cheap to the poor people. It's much higher cost than what I borrow. How will the poor people borrow money at a very exorbitant rate of interest and be able to pay it back and to be able to produce goods to sell to other poor people who don't have too much money?
In a study on financial access in Kenya, most respondents declared that whereas they were aware about the need and importance of life insurance, they chose to avoid it because of issues of misrepresentation of facts and limited disclosure on charges and penalties. In some instances, consumers believe that they are purchasing investment products only to realize that they are packaged as life insurance, and deciding to exit before a minimum period of 3 years results in unbelievably punitive penalties, including loss of more than 50% of the amount of money paid to the insurance company.
People are very susceptible to being taken advantage of, particularly those that have only been educated up to a certain level. Even for educated people, it can be rather confusing to be told how much you got to pay back if you take a loan, or how much you'll get on your savings account, and it's compounded quarterly or monthly. If you want to access a pension fund, they tell you, you guaranteed 6%, but maybe you get 20%, and there's room for manipulation on the part of financial sector institutions.
A Financial Services Consumer Protection Authority would replicate what the Kenya Bureau of Standards does for goods, this time on financial services, ensuring that all is clarified beforehand and consumers need not fear hidden conditions. And to further attract more individuals into financial services, there needs to be urgent reform on personal bankruptcy laws. For instance, individuals who lose their jobs while servicing loans face a myriad problems and need to be protected, especially if they are capable of securing other jobs in future. In the current setting, being declared bankrupt is like the legal equivalent of being declared dead.
Ideally, if you default, therefore you are partner, in this case the bank who gave you the money to do the business, should find out where you have gone wrong and maybe assist. I believe some banks do this, but very many financial institutions will be quick to apply penalties.
The establishment of a Consumer Finance Protection Authority should deal with the challenges currently plaguing consumers and could result in increased confidence in financial products and services and consequently more uptake.
When KTN Business Weekly returns, bringing together those in need of capital and those who have it through a unique event organized by the Kenya ICT Board. That's coming up on Corporate Focus. On the other side of this break, stay with KTN Business Weekly.
KCB Group has played a major role in the first ever Transformation and Effective Infrastructure Projects Conference to be held in Nairobi next month. KCB Head of Institutional Banking Rebecca Likami said the bank has donated 120,000 shillings towards the organization of the conference, which will provide a roadmap to facilitate the provision, maintenance and management of quality roads infrastructure in support of Kenya Vision 2030 aspirations. At the same time, KCB has donated 300,000 shillings towards the just concluded Kenya Primary Schools Head Teachers Association National Delegates Conference. Kenya Primary Schools Head Teachers Association National Chairman Joseph Karuga said KCB continues to maintain about 60% of all free primary education funded program accounts. Out of the 19,000 registered primary schools in Kenya, 10,900 schools operate their accounts with KCB. Besides this, 40% of personal loan book constitutes loans given to teachers. The conference was held last week at the Sheikh Zayed Children Welfare Center in Mombasa. In other news, the KCB Foundation has donated 213,500 shillings to Mtsara Watsatsu Primary School in Ganze as part of its corporate social responsibility initiative to support communities living along its rally routes. The bank held the KCB Amana Banking Rally last weekend.
Wiki ya KCB ya kushughulikia jamii ilianza tarehe 1 mwezi wa 10 na kumalizika wiki moja baadaye. Na katika wiki hiyo tulikuwa tumejitolea kutembelea mashule mbalimbali kama Mtsara wa 3 na kuweza kuwasaidia kuwanufaisha kutokana na mahitaji yao. Katika msimu huo tumetumia kiwango cha shilingi milioni 17.
Speaking to KCB News, Divisional Director Public Affairs and Communications Kefa Bosire said the amount will be used to purchase 80 desks as the mentally disabled schools' facilities have been overstretched following increased enrollments. The bank supports the provision of quality education for more than 800 pupils who require an additional 150 desks at the school.
Na matakwa yetu kama kampuni ya KCB kwamba tukiwapelekea wananchi mashindano ya magari, pia tunashughulikia mahitaji yao ya kindani. Tunajua kwamba KCB huenda haingeweza kukidhia mahitaji yenu yote, lakini kwa hivi leo tuko na furaha kwamba ukiangalia mahitaji yenu haswa katika madawati ya wanafunzi, kwamba hii leo tumewapatia madawati 80 ambayo umetugharimu zaidi ya shilingi 230,000. KCB itawaongezea madawati zaidi 30. Na katika bwawa la wafulana tulilozuru pia tutawapatia vitanda 20 vyenye ghorofa.
KCB Foundation focuses on 5 thematic areas, namely education, health, environment, humanitarian intervention and enterprise development.
On Monday afternoon, the Kenya ICT Board, through a unique event, brought local IT entrepreneurs face-to-face with the owners of capital who could offer them the funds they need to grow their businesses. Our team was part of the live audience and captured some of the presentations.
Angus Kowach is a bit nervous as he sets out to present his business venture before a panel of capitalists. And should he impress them, he could receive capital amounting to between $500,000 to $3 million. That is anywhere between 40 and 240 million shillings. His invention is called M-Trader, a software-based platform for stock trading on mobile phones and personal computers. Kowach would like to provide up to the second streaming of market data and statistics. He is one of a number of local entrepreneurs taking part in a unique event organized by the Kenya ICT Board that brings entrepreneurs face to face with the people that could offer them the funding they need to grow their business. 8 companies pitched their ideas to a panel of venture capitalists in front of a live audience. Each company had 20 minutes to sell its idea.
And we're really excited about it. What we've done is we've brought some 8 technology companies and 5 VCs, venture capitalists. And what we want is the technology companies are going to pitch their business ideas to the venture capitalists. And they're going to get feedback from the venture capitalists. The reason we're doing this is that we had a grant competition earlier this year. And it went really, really well. We had over 2,000 people participate in the grant process and over 600 applications finally. We awarded 15 companies, but there were many other proposals that were submitted that were really good. So we wanted to give these people an opportunity.
The ICT Board is using a unique event to tackle some of the unique challenges that information technology entrepreneurs face. Many IT entrepreneurs face an uphill task convincing financial institutions to grant them loans, as the institutions are at pains to grapple with the world of IT, which at times appears too complicated.
It is a major challenge because what you're essentially selling, if you're a unique company and you're selling unique products, then essentially the bank wouldn't have heard of some of these products. So you're selling something that is not yet proven. However, you need the bank's assistance in order to get you to a point where you can prove your concept.
However, the ICT Board says that Kenyan technology and new media sector is buzzing. In Kenya, over 80% of citizens have access to a mobile phone, and internet connectivity is rapidly expanding across the country. Solutions like M-Pesa have revolutionized the day-to-day lives of Kenyans, bringing in financial services to anyone with a mobile phone. With the increasing use of technology for business and lifestyle comes the opportunity to build vibrant businesses to deliver technology solutions that will capitalize on the expanding demand for mobile and internet services.
And what you see a lot is also Kenyans who've worked in the US or the UK now returning and setting up, in particular, these kinds of businesses. And especially in the mobile area, I think Africa might have a competitive advantage even over the West.
The Kenya ICT Board was established by President Mwai Kibaki as a state corporation under the State Corporations Act Cap 446 on the 19th of February 2007. The achievement of an information-based society is one of the main priorities of the government towards the realization of national development goals and objectives for wealth and employment creation. ICT is one of the fastest growing sectors in the country. Harnessing of ICT will therefore help the government to realize a number of its key public policy objectives. In general, ICT will contribute significantly to the process by improving government operations as outlined in the e-government strategy. However, despite the great opportunity accorded, a winner was not announced as none of the entrepreneurs impressed the judges.
In front of the troops.
Presentations were not well researched and rehearsed, with entrepreneurs unable to answer simple questions like how much was startup capital, website traffic, or returns they expected or needed. Also, inventions were not impressive, commercially viable, and in touch with the Mwananchi's needs. It did reveal that there is a gap. However, the ICT Board plans to hold many more of such events even as investors try to raise the bar.
Now let's take a look at the ongoings in the local, regional and selected global financial markets this past week.
The Kenyan economy expanded by 5.4% in the second quarter of this year, while the overall rate of inflation dropped marginally to 3.21% in September, down from 3.22% in August. The 91-day Treasury bill rate was pegged at 2.12% during the October 7th auction, unchanged on the previous sale, while the 182-day tenor also remained pegged at 2.09%. The 364-day Treasury bill is attracting interest at the rate of 3.06%. The average bank lending rate in August stood at 14.18%, but the average bank deposit rate during the same month was 3.74%, meaning that banks were, on average, enjoying a net interest rate spread of 10.44%. From the local and regional equity markets, Nairobi's NSE 20 share index rose 0.9% by close of business Tuesday, while the all-share index was up 1.5% to 101.91 points. Kampala's USE fell 1.4%, while Tanzania's DSE index was unmoved at 1,172.99 points. In South Africa, shares broadly edged lower, with the JSE index edging up 0.7%. Elsewhere across the world, London's FTSE 100 increased 0.3%. In the US, the Dow Jones Industrial Average edged up 0.4%. Japan's Nikkei average was 0.9% worse off. Moscow's RTS index was up 0.4%. Bombay's BSE Sensex was 1.6% weaker. Shanghai's SSE Composite was up 3.3%, while Brazil's Bovespa index was 0.1% inside positive territory. From the local currency markets, the Kenya shilling was, on a week-on-week basis, slightly lower versus the US dollar, unchanged against the Uganda shilling, but rose marginally to the pound sterling, euro, Japanese yen, South African rand, and Tanzania shilling. Mumias Sugar Company, Housing Finance, KPLC, Unga Group, and Kengen are the 5 shares currently trading with dividends. Yields range from 1.3% at Housing Finance to a high of 3.7% in the case of Unga Group shares. The week's lead price gaining shares were EGADS up 8.7%, Kengen adding 6.9%, Diamond Trust Bank edging 6.7% higher, Cooperative Bank up 4.6%, and Bamburi Cement closing 4% stronger. The 5 price gainers added a total of 9.659 billion shillings to the aggregate value of their company's market worth. Going down by the biggest margins were Kenya Airways dropping 5.9%, Samir Africa easing 4.8%, Carbasid Investments settling 4.1% south of last Tuesday's average close, East Africa Portland Cement down 3.4%, and Marshall's East Africa closing 3% weaker. The 5 price losers caused the total market value of their company's stocks to fall by 1.985 billion shillings.
Well, that will do it for this week's episode of KTN Business Weekly. The program's email address is ktnbizweekly@standardmedia.co.ke. In case you do have anything you would like us to share with you. For now, though, thanks a lot for tuning in. Have a rewarding and productive week ahead, and see you same time next Wednesday. Good night.